I'll keep the questions kind of a little complicated. So Mohit, I'll start with you first. See, you have been yourself the founder first before you come to the other side of the table. Is it a good thing or a bad thing? Because when you were a founder, you had a certain way of doing things. And you might also have a bias. I'll keep the question was the right way. Kind of a little complicated. Has that changed? I'll start with you first. Companies, you have been yourself the founder first. How has your perspective changed on when you did things as a founder versus when you hire other founders and their way of doing things, specifically in D2C?
It's a great question, actually. So let me give some context. I started the Moms Company in 2017. We sold in 2021 at the sort of height of the COVID era. Handed over to the acquiring company over the next 2 years, and I became an angel investor, and now I'm at DVC. DVC is an early stage, sort of pre-seed, seed fund. We typically invest in companies when they are just getting started, or there's founders, and especially in the brand space, they have a brand and a few months at least of revenue. We work alongside angel investors. First round is typically $1 million, right? So very early in the life of a company. I think what's changed is I have basically realized that मुझे कुछ नहीं आता, right? And when I started this, it was in 2017, and I don't know how many of you remember, but Facebook groups was big, Instagram was just taking off, right? E-commerce, I had to go and explain to investors that D2C hota kya hai. That's what was a very different time, and I think from moving from a founder to an investor, I basically realized that every few months the game completely changes in something as dynamic as D2C, right? So right now, for example, Facebook groups are completely irrelevant, but on Instagram, if you're not creating reels, also you are, right? So that has completely changed. E-commerce has changed. Quick commerce has come in and just created massive opportunities. So I think the whole game has changed. As an investor, what I tend to look for now is, because the landscape changes so quickly, how often do you as a founder change, right? So I will typically ask, okay, if you launched 1 year ago, what did you start with as your assumptions, and how has that changed? How has your team grown? How have your products evolved? How has your customer changed, and how have you reacted? So a lot of what I'm looking for at my stage is there is some revenue, there is some profitability, but really the speed at which you are learning and changing the business is in sync or faster than how the market is evolving. And if you can do that, then when I invest at my stage, which is a small amount, I can take a bet that, okay, over the next 4, 5, 10 years, you will still be relevant and be creating a large business.
That makes sense, and I agree. हमें कुछ नहीं आता. That's the one thing I have also over time figured out. कि everything is changing so fast that we can't catch up. It's just accepting way. Sarthak, from your side, I think there is a lot of content around financial discipline, like what to do and how to manage that whole funds that come in. Typically, most of these founders are first time raising money, and a lot of things are experimental. What is your advice? How do you look at this financial discipline as a general theme? Like founders should follow a couple of big points.
Yeah, I think firstly what has changed drastically over the past 2 years is the fact that now CM2 positive is such a necessity even at the pre-seed stage, that essentially you can't say that I'm raising capital to spend on marketing. Essentially whatever capital you raise has to go into either team building or administrative expenses from a long-term perspective, just to be able to fuel growth. And I think what I've noticed is a lot of companies continue to create their financial MISs from a reporting to VC perspective. And now I feel, at one point I used to say you need to look at it on a monthly basis. Now I say if you're not looking at it every Saturday evening from a weekly point of view, you've kind of missed the bus, because every week it's changing so rapidly that there's a huge difference between looking at it, say, 12 times a month and looking at it 52 times a month. And that's really what will make all the difference. So I think CM2 positivity is something absolutely which is relevant. Then even a lot of growth that we're seeing in brands on quick commerce, is it really profitable? What is the unit economics there? And I think the biggest challenge is, and this used to be a huge case for brands listed and selling on Amazon and Flipkart at one point, And even quick commerce at the point where they're getting Excel sheets and reconciliations are so delayed for 2 months that they don't know why certain deductions have happened. And I think that's a very big challenge anyone selling on quick commerce will have to plug ASAP. So that's my 2 cents.
No, fair. I think we'll come back to that, elaborating that on how. Like, that's a great advice, but let's go deeper into how can we do that. And from Rahul, I think from a bank's standpoint, is the underwriting policies have been designed for a very different kind of businesses, and D2Cs in general are different, and that's where the whole fintech ecosystem around it kind of developed. It's like, have the banks changed their view? How are banks looking at the D2C business in general, given they might be not as legacied old businesses, right? So some changes have come in. While even they might be 6 to 8 months old, but the metrics might justify a financing or structured financing or a different kind of product for them.
Sure. I think very apt question. We were also discussing earlier that so banking is in place for centuries now, okay? And even way the banks think, banks foresee, a traditional model has been developed in terms of you need to share your balance sheet, banks will evaluate the P&L, they will talk about the securities that you have to offer, your profitability in terms of what your numbers have been for last few years. But I'm afraid if the economy is changing, a lot of new economic clients are coming in, if we put the same lens and lend it, I think the banks will not be able to lend to even one of the startups, one of the new new age entities. So thankfully, all the banks, a lot of banks in fact, I will not say all the banks have diligently worked on it. They have ensured that they have specific policies for lending to startups, where they are going beyond balance sheet numbers. They are predominantly concentrating on few critical factors in terms of the promoter, the founder's pedigree, what is the unique solution a startup is bringing, what are the unique problems they are solving, their customer connect. But yeah, very importantly, at least in terms of the paths towards profitability and continuous revenue stream. This is one of the critical aspects that bank evaluate. A lot of banks have their own startup funding policy. That's good for industry, and I think
की तरह एक्ट करता है तो शिपरॉकेट में आपको शिपिंग लॉजिस्टिक्स से रिलेटेड कोई भी हेल्प चाहिए हो, कोई भी आपके सवाल हो, शिपरॉकेट को समझना हो कि कैसे ये काम करता है, तो वो सब यहाँ पे आप पूछ सकते हैं. आपको अपना डेटा जानना है कि मेरी आरटीओ परफॉर्मेंस कितनी चल रही है, मेरा सीओडी रेमिटेंस कब तक आएगा, कितना है वो अमाउंट, या आपको कोई ऑर्डर ट्रैक करना है तो वो आप यहाँ पे पूछ सकते हो और ये आपको इंस्टेंट आंसर्स देगा.
तो ये क्या टेक्स्ट कमांड है या फिर ऑडियो बेस?
टेक्स्ट एंड ऑडियो बोथ यहाँ पे चलता है, तो आप वॉइस से डायरेक्टली मतलब आप मैं दिखा भी देती हूँ आपको.
Scaling beyond a certain valuation metric. How are you looking at when you come so late? Are the different metrics we are looking at? What kind of things change and their way of operations when you enter on the capital?
शिपिंग या ई-कॉमर्स रिलेटेड किस काम में मदद कर सकती हैं?
क्या आप मुझे
First
मेरा
of all,
ऑर्डर
glad to be here. And thanks that you asked that, because I did want to give this disclaimer that investors at different stages, and in general all investors would look at things very differently. And it would be a grave mistake to generalize, right? So as Vishesh said, we at Bertelsmann, we are in early growth fund, to simplify Series B, our checks are larger. We are running a large fund, so we are looking at different things purely for the maths involved. And hence for us, when we look at brand commerce, let me put it this way, because I'll get theoretical with D2C as well. For us, there are 2-3 things that need to match, right? First of all, obviously, to Mohit's point, team is super important, right? That, I think, never goes away at any stage. The founder's relationship with the problem and the solution, unique insights, how you're thinking about it, how you're building teams, how you're building distribution. I think that at every stage needs to evolve, as you said, and that is super important. Second, I would say is, at our stage, there is always data to look at, right? And there are customers to call to. I think one thing, again, that is common is customer love. And that is not very difficult to check. We speak to customers, we look at retention data, we look at wallet share in the category. There are so many things that you can look at. And that, I think brand you cannot build in 2-3 years, right? It's a loosely used word. But what you can build is customer love for your key products. You can build the team culture centered around that, and that will eventually lead to the brand down the road, hopefully. And that is where we focus our attention. The third thing I would say, I'll not go too deep, can dive into that, which is the late stage thing. See, for us, we are looking at very large outcomes for the math for our fund to work, right? So we would, while as much as we look at CM2 and CM3, we do look at growth, right? And the message that I would want to give to entrepreneurs, see, not every business is meant to raise a lot of capital, right? Unfortunately, it's getting better, but you know, sometimes that's the message that goes across. In brand businesses, these are very high margin businesses. Unlike a lot of software businesses that we see, there is an opportunity over here to build large outcomes by raising less. May not even need to come to players like us or late stage. And I think at some point that financial acumen, or, you know, or how do I put this, you know, this realization of what end game we are building towards can help a lot on how you need to structure your capital sources, your growth, where to go at, and can create a lot of value. We have seen many great products and businesses fail because they raised too much capital which was not needed, right? So that is a very important thing to keep an eye on, I would say.
Continuation to that, right? Two things. One is the customer life cycle you said. It changes with categories, right? Yeah. Specifically in D2C, the category defines the life cycle. Or certain categories might just be unit economics. The other one would be in terms of when, it's not unlike software businesses where you have contractual revenue. This has to be designed in a certain way where capital spent and the growth comes. It's a very fine balance. How do you justify that as you scale? Because as you keep scaling, after a certain point, those metrics don't kind of remain the same, what they were in the early, smaller number of orders.
No, so this is a perfect point. See, this is where I will go to my last point, right? So category actually is one of the biggest things. In fact, at our fund, we have biases towards and against categories for precisely this reason. You know, where you can create a lot of value, where defensibilities could be higher, where large outcomes are possible. We are wrong all the time, right? So it's not that we have figured all of this out, but definitely there is a bias towards that. If you look at our investments, we are there in Licious, we're there in Nat Habit, we are investing in a fruits and vegetables. If you look, there is one common pattern I can tell you, right? So given our focus on large markets and defensibility, we have tilted a lot towards categories where supply chains are very complex. All of these, you know, segments have their own processing and manufacturing. They all deal in perishable categories in some way or form. And that adds to the value of the product itself. So we definitely, you know, as it comes to category, it will define a lot for us. If it's super competitive, the wedge is not clear, the market is, you know, filled with different players, it's not that you can't build a great business. A great product and team will find its place. How big you go and what kind of people you take along with you on journey, that's the only difference. Like, otherwise you can always create a very lucrative business in all categories, let me put it this way.
Sorry, coming back, Mohit, when you do smaller checks, you end up building a large portfolio. But also when you do smaller checks, the founders will need a lot more involvement, mentorship, training. It's kind of becomes hard. How much time, how do you justify that involvement? Because one advantage, they also need a lot more involvement versus you also have a lot too many number of portfolio to manage at the same time. So how do you justify that process in early stage?
We have an interesting model where we actually work very closely with what we call collective members or angel investors. I started with DVC as that. And then in our pool, there's also Chakri from Country Delight, Shashank Whole Truth, Mosaic from, or Revant from Mosaic and so on, right? So we built people who we think can be the most helpful, right? So that's one part of it. We leverage them. Second is what you realize when you talk to especially founders in the early stages of building, right? Before Bertelsmann would come in, for example, a lot of the problems are repeated, right? Consistently, if I ask you across this, I can do a poll today and say, what are your top 3 problems? People are going to say, how do I manage money? How do I do my team? And my fundraise, right? These are the top 3 problems consistently for every brand. So as long as we can solve through events, playbooks, time spent with team members, I think that gives us a lot of leverage because we know what people are asking for. The answers become much more complex and nuanced once you get to a later stage. So our job, we think, is to make founders successful from our journey till when he cannot say no, right, for the next round. So that's our job. And as long as you focus on all the core metrics, like you said, help people with a little bit on brand, customer love, just opening doors, then founders are awesome. They can do all of it themselves. You just need to support them.
Fair point. This is one question I would actually direct towards both of you, Rahul and Sarthak. Tactically, what instrument, I think there's now a lot more options available, given over the last 5 years. Now, financing options available are a little bit more. You can go debts versus equity. Even at equity, what valuations, how do you justify a valuation in a category like this, where a lot of founders become obsessed with, I'm not diluting. From both sides, from a debt point of view, from an equity standpoint, what is your take on that? What is the right instrument at what time? How do you decide? Or maybe what is the template to follow? How to decide?
I think mine is fairly straightforward. I would say if it's your first round, definitely try and go and you're raising less than 1 crore or say less than 2 crores. Definitely go for an unvalued round if you can. And the reason for that is initially you will also have a lot of family members participating. You will have friends participating. And they're essentially betting on you. When you don't really have any financial metrics, a lot of times you also don't want to give away, say, 18 to 20% of your equity just for about 2 crores because you think there is a lot more that you can do. So I think first round, I would just say do like a simple CCD or a convertible note, depending on, of course, if someone's putting in 25 lakhs or lesser, and give them, instead of signing off maybe a 20% discount, I would say go for like a 1.5% discount per month, so that if you're able to get to a reasonable valuation and a reasonable milestone within, say, 8-9 months, you're not really signing off 20% discount on the next round valuation. So I would say that seems to be most logical for me in the first round. For the second round, again, if you look at market benchmarks, I would say try and negotiate that you get the next 24 months of runway. If you can justify in your financial model to last you about 18 months, so plan that money would last you 24 months, but show it to the investor that it will last you about 18 months, so 18 to 24 months. And try and give away not more than 17%, 15 to 17%. If you can manage it, I think it's great. Of course, it varies based on whether you're D2C, whether you're fintech. Those industry benchmarks also come into play. But that's next, and I would say a CCPS again is most widely understood. And that's what I would recommend. What I ask people to be wary of is definitely things like CSOPs. And I think there was a time when that was really hot where Har Ghar...
This is something we need to explain. Let's go deeper.
Yeah, so I think community stock options is something that came about sometime during COVID and in the first round of Shark Tank, where there were ads to say that you can invest in a startup for as little as 5,000 rupees. But the idea was it wouldn't really go to the cap tables. Whatever money you would give to the startup would actually show as revenue on their books. And they would say that it's these people, it's this community members who are actually pooling in money and giving and buying something like a subscription of this consumer startup. And tomorrow, if they want to buy, either they'll get it at a discount or some such. And so essentially money is coming not in the form of capital, it's coming in the form of revenue. And because the startup is loss making, it has a lot of input tax credit collected in the form of GST. So there is no cash outlay from a GST perspective. You're just utilizing your input tax credit to pay off the GST. And then the terms are actually quite draconian, where they would say if you have to return the money within the next 1 year, you would have to pay double. If you repay it within the next 24 months, you would have to pay 3 times. And even in our network of certain startups that we were working with, founders are like, I really need this because I need a bridge round. And the round, there is a due diligence happening. It'll take 3 months for that to close. I'm quite desperate. I need this. And I was like, it just doesn't make sense. Don't go for it. But then, of course, we've all seen that there are actually cases where the registrar of companies, as well as the Ministry of Corporate Affairs, They came out with orders to say this is quite a sham and you can't do all of this financial and accounting jugglery trying to take capital as revenue and then repaying it in the form of expense, saying that this community actually promoted us offline and they spoke about us. Any such scheme which sounds too good to be true, just please be very wary of it. I see people who got desperate and did it.
So isn't that a way of Kickstarter? Kickstarter became big.
Yeah,
isn't the same model?
No, that's a great question. The reason is that the reason it doesn't work in India is because you're really in spirit trying to go against the law. Because if the law says that, you know, you can't take more than 200 investors on your cap table as a...
But is the law wrong?
I don't think the law is wrong, because when you look at a geography like the US and a geography like India is actually very different. The reason I say that is because India, the regulator is trying to safeguard a lot of retail investors who don't really understand the risk of what they're doing with that 50,000, 30,000, 1 lakh that they would think of putting in a startup, thinking I'll get double the money in the next year, without really understanding or comprehending risk. So I think somewhere it's important for the regulator to come in, which is why even from an AIF licensing perspective, angel investor licensing perspective, there are conditions that an angel investor, if they invest through an AIF and put in a 5 lakh check, over a 3-year period, they need to invest a minimum of 25 lakh. And of course, we've seen cases where, you know, people have set up AIFs and gotten people to put in 5 lakhs in different startups, but then they don't have the pocket to invest 25 lakhs over the next 3 to 5 years. So I think these are certain regulatory things that people need to be very cautious of. So if your chartered accountant, your company secretary tells you that this is gray area, please try and be safe as much as possible, because as they say, it takes a lifetime to build a reputation and just a few seconds to you know, let it go down the drain. So I just say gray areas, please be very wary of.
Well, just continuation of the same topic.
So I want to touch upon relatively easier part, which is the banking lending perspective. And very specifically from Yes Bank perspective, what we have tried to do is we have tried to uncomplicate things. We have tried to keep it simple. We are doing more of a parameterized kind of a lending with set parameters, people who will fit into the criteria, because turnaround time is also critical. As I said, key parameters could be in terms of the both founder and investor pedigree. So investor would have certainly done one level of due diligence, and the kind of investor who has come in, we draw a lot of comfort from there. What is runway is very critical for us, because we don't want to fund the runway. That is not our core business. That is where I think other participants are well placed. So typically in terms of instrument that you asked about, we do mostly working capital kind of a funding, keeping track of the regular cash flows in terms of the profitability. One important factor that we see is how do we see the growth potential of a particular startup, and we would want to work work with the life cycle of the startup and ensure how do we help them in growing their businesses. So uncomplicated, parameterized kind of a lending with regular monitoring, cash flows, etc.
So one last question, which was a founder actually asked me this. Personal guarantees in a venture funded system, when they approach debt, collateralized personal guarantees, and that becomes a little bit complicated when that angle comes in. While they need the debt, they are confident in their projections, but certain underwriting policies also involve personal guarantees from the founders and collaterals. Has that come across to you? What's happening on that front?
So in the startup world and lending to startups, at least I can speak about my bank, Yes Bank. We would have hardly done any case who would fit into this bare minimum criteria. We would have not taken even a hard collateral in even any of case, even a single case. That is very clear. We derive more comfort from the promoter, founders, and we don't take any personal guarantees for that. These are typically instruments which are used for more traditional manufacturing kind of entities, whereas I am saying the criteria, parameters that we have is absolutely different. It may not include in most of the cases a promoter guarantee or an hard collateral per se.
Rohit, one thing that I have been thinking, I think D2C in general, we've seen this for over 7-8 years now. A couple of IPOs happened. There seems to be a market, like there's a cap on the top level valuation kind of thing. While we have traditional consumer CP brands and where we have seen businesses worth multi-billions and stuff. But on D2C, early D2C brands that even went public, there seems to be some kind of ceiling where it seems that even roller plays happen with multiple brands into a single entity. Something, where is the miss? Where is the gap? Is there a ceiling there? Why is this new age D2C not hitting and going far from that? D2C brands have gone offline, so they're doing everything that a traditional old consumer brands did. So where is the gap?
Over here, I would be a little more optimistic. I would say that time will tell. I think it's been too short a window so far to make a judgment on where the ceiling lies. We took, I think, 15 or whatever, 20 years to get our first $30 billion company, right? I think India has not even generated a $100 billion VC-backed company. I think it will happen, definitely happen, right? I'm very optimistic. In fact, that's why we are doing this every day. We believe in India. We believe in what it can deliver. Whether D2C companies will, if you look at other, let's look at Manyavar, right? I think they did breach the 3 billion mark, right? And then came down. There are examples there. So I am very clear that there would be large outcomes. It may take longer to get there. It will depend on category. 100% to our earlier discussion. In some of our investments, we are very hopeful that we will be able to deliver big outcomes. I think it's only a matter of time. D2C has been very new. If you look at the, how this industry evolves over time in West or over here, first the e-commerce wave comes, then the vertical e-commerce wave comes, then the D2C picks up on the back of that. I think we are just in the early innings, to be honest. I think it's a matter of time till you see 5 billion, 10 billion outcomes in this way.
So, please.
I had my phone open because I was checking out Marico's stock price and valuation, as you said that. In the first 3 years, Marico went from 250 to 450 crores. And in the lifetime, it's grown 500x. So I would assume out of that 500x, let's say the first 30, 40x for new D2C brands have happened because they were in the private markets from seed to venture, which didn't exist before pre-IPO. But to what he said, the story is just getting started. Who's here to say 20, 30 years from now, these companies won't be 30, 40 times their size?
So now the continuation of that is what and timing from an exit standpoint. D2C brands have typically two options. Either sell to a large, already pre-existing listed conglomerate or go public. When to go public from a D2C brand point of view, given how much value should we leave on the table, kind of is a big question there. How do you look at exits from, as an investor's point of view? Yours will be different. At early stage, you would look at it very differently. So just, if you can
at an early stage, we will typically enter when the company's valuation is 40, 50 crores, right? Around that mark. From our fund cycle perspective, which is true to us as investors, and this is not about the company. Right? Our fund cycle is we want to return money to our investors in about 5 years. Right? So we look at a 5, 6, 7, maybe a maximum 10-year horizon for our holding of equity. That could be in the 10 years, we would either sell to a larger fund in a later round, or we would sell to another company, right? If there is a company buyer, or if an IPO happens, then that happens, right? So I think the way you look at it is, especially in the private markets, whenever someone puts in money, buys some shares in your company, they are looking at exiting those or selling their shares in an 8 to 10 year horizon. It could be either an acquisition or it could be an IPO. Larger companies, if someone enters at a pre-IPO round, they will hold for much longer. Right? So it's really a question of at what stage does the investor come into your company and what is their time horizon.
So for you, when do you advise them from?
Your question is more about how should founders think about it, or how do we think about our entry?
It's a combined decision, right? From a capitable point of view as a board, you will combine take the decision, but
it could be slightly different, right? Because to Mohit's point, so we are in a privileged position again as background. We are balance sheet investors. We do not have fund lives, right? And I don't think founders don't have fund life issues, right? It's the investors who have that issue. We have, investing windows and so on and so forth. I think ideally, if, it's a synergistic relationship, this should not be a founder's problem, to be honest. Definitely there is a responsibility to provide your investor an exit. You should be moving towards that path. You should be facilitating that. But you don't take such large calls because somebody's fund life is getting over, right? And hence, I think India anyways is maturing the ecosystem even on the secondaries liquidity side. So these problems probably will fall away for companies that are performing well. Now, when to go public, I think there are a lot of factors in that, right? Now, definitely, conventional wisdom is that you should leave a lot of room for new people to coming into the company to create value. But at the same time, there is this undercurrent assumption, I think, that has creeped in during this last decade of zero interest rates, that staying private forever is kind of a blessing for a founder, right? I don't know, I've heard mixed things. There is a lot of value that as a public company that you also get. There is some additional compliance nightmares that you can get into, but by and large, if you look at the best of the companies of our generation in the Valley, you look at the Amazons, the Googles, the everything, the Metas, like most of them have created 99% of their value after they went public, right? There's nothing wrong. And nobody stops you from being startupish, nimble. That's your culture, right? I don't think, it's a strategic question at a point in time when you are thinking about it. But if you, in my view, if you took a long enough window, I don't think this is the make or break for the company, and investors and founders should together, for each specific case, should come together and solve for it, is what I would say.
One thing another is large-scale branding activities like sponsorships, celebrities, getting brand ambassadors, which involve significant amount of capital. I have seen cases on my side where they spend about 35–40% of their raised capital on one brand sponsorship deal. How do you look at this, and what is the advice you would give in that front? When to do that is right, and how to do that is more important.
Yeah, so I think very interesting, because I'll just take a case study of a friend who, who started Moxie. I think it's a hair care brand, and we go back to college together, and she started sometime last year. So the brand is as old as a year and a half, and they're at about upwards of 5 crore MRR at the moment. And the largest amount of unlock, and what I've been surprised by is that over the past 1 month, no matter which city I'm going to, I'm just generally in conversation, checking with people, and I just mentioned Moxie, and I'm quite surprised to see that practically every person I'm speaking with knows about the brand. So I was generally sitting with the founder, Nikita, and figuring out how they've cracked it. And it's all based on user-generated content and, authenticity on social media. So I think which has really enabled building the kind of user trust, a lot of repeat rates, shareability on the back of social media, that today you don't really need a very big name. So I would say maybe when you're that big and you're raising hundreds of crores, these days even all celebrities have their own family offices, and they're constantly looking for deals where they rather take equity than cash upfront, because they have enough cash and then they don't even know where to invest that money. So I think one can be smart enough to just split it across cash and equity when it comes to brand ambassadors. And another brand that I was speaking with 2 days ago is this one called Arva, around egg freezing and IVF. And I think they took egg freezing as a nice GTM to get to IVF later on. The brand loyalty amongst women between, say, 27 to 32 is just nuts on a social media page which has just close to about 30–40,000 followers. So I think there are many more creative ways of doing it today.
No, thank you, and thank you everyone. I think I've been told my time was up a while ago. So yeah, so we'll have to wrap it up here, and thank you everyone for joining.
Thank you.
Thank you so much. Ladies and gentlemen, another 20 seconds for us to begin with the last and one of the most awaited sessions of this evening. But can I give you a quick 20-30 seconds to settle down? Fantastic. We've enjoyed this day being the part of Shiprocket SHIVIR 2025. We've made the most of every moment, every session that came on stage. We've made it alive. Now time for us to move on, one of the most engaging sessions of this evening, one of the most awaited sessions of this evening. Ladies and gentlemen, they say that people don't remember what you say. People don't remember what you say. However, they remember how you make them feel. Selling simple to say, it is a transfer of feelings. Someone who has transformed an entire industry is going to join us here on stage. We've all seen him shining in on the television as one of the sharks. The man behind John Jacobs' Lenskart Foundation. We are going to be joined by this personality in the next couple of seconds. Before I welcome him on stage, I will request you all to please have your eyes on the screen as we'd like to showcase the Surya video before we call the guest up here on stage. Can we please have the video? Hope you enjoyed the Surya video once again. Now, I think it is time for me to take my steps behind and introduce on stage someone, of course, who needs no introduction, someone who has built an entire legacy, built an entire community, who has truly redefined and defined what it is to build a community which involves passion, people, and purpose. I think you all know it is time for us to invite up here on stage. Please give it up for Mr. Peyush Bansal. And joining him alongside we have Mr. Sahil Goel, MD and CEO, Shiprocket. Come on, everybody!
Thank you so much, Peyush, for joining us today. I think the crowd is, you can see that everyone's very, very excited. You know, in many ways, you're the OG D2C, Shah.
That's my introduction.
Yeah, and then you're also the OG mentor to even us. I was joking with Peyush, 2-3 months into the formation of Shiprocket. It used to be called Cart Rocket back then. I remember going to their Okhla office, you know, and waiting to like sort of meet him. We were that time like 2 people in the company, Gautam and I, and we were about to outsource our entire tech. And he said, "Pagal ho gaye ho kya? Tum SaaS company bana rahe ho? How can you outsource your?" So I'm saying, I now it sounds stupid, but back in the day, you know, you've been sort of a great mentor to us, and then now your journey has been nothing short of phenomenal, Peyush. I loved kind of observing, rooting from the sidelines. But tell me, in your early, like, first couple of years of Lenskart, what were you obsessed about in that first 1 or 2 years, right? I'm sure that for founders in the audience, that insight will be very, very helpful.
Yeah, thanks, Sahil. Great audience. Looks like I've not been on stage for a long time. With AI happening, I think everyone has to move faster. So I've been busy with work. But we started 14 years back. Sounds like yesterday. Honestly, I wasn't so excited about building a business for a very long time. It wasn't something that I always looked at, and my family looked at business as the less earning option. Right? They were always like, कि job करोगे तो अच्छे पैसे बनेंगे, ये business करके you are only digging the grave. So money was not the motivation anyways for me. But I think the larger picture, at least for me and some of us, we have to do something impactful. And constant desire was to do something which has not been done before, and also something which is going to be extremely difficult. If it was easy, then it was like then anyone else can do it. And I think because of luck or destiny, we stumbled upon the problem of vision care in India and globally, and it kind of felt like that, why is nobody solving it, you know? And for some time it looked a little bit unbelievable ki why is no one solving it, but I think there are problems in the world which are out there, jo hamari aankhon ke samne hai, but nobody is really trying to solve those because we feel they are unsolvable, or we kind of gravitate towards things that everybody else is working on, what is hot in the market. At least I can tell you, eyeglasses and vision care was not hot in the market, right? It was far from hot. You know, I will tell you a very funny story. My co-founder Amit, who you know, uski shaadi karani thi, he had a girlfriend, and live-in कर रहा था वो, and तो उसके father-in-law से हम मिलने गए impress करने की भाई मान जाओ, because they were different caste or something. तो he rejected saying कि यार मैं चश्मे बेचने वाले से शादी नहीं कराऊंगा. So that was how not sexy our category was. But I think what motivated us was that the problem is very large, right? And even today it is super large. कि 500 million लोग हैं इंडिया में जिनको चश्मे की जरूरत है पर पहनते ही नहीं है. And why is nobody solving it? And I think that was the motivator that kept it going, and I started very early, so there was not much to lose. So I think maybe if that is the motivation, it makes it more interesting, and then you have to be lucky.
So I think, you know, having purpose or a mission, I think, is important to go the long kind of road. And I think about luck, right? What do you think about luck? Don't you think it's, I mean, I know it's there's no right answer, but what is your view on that? Do you think it happens to everybody equally, or it happens to the more prepared or the hard worker?
Yeah, I may have different. I don't think it happens to the hard worker always. I'm not saying that you don't need to work hard, by the way. You're born with certain luck, and sometimes, yeah, it's philosophical. You have to be lucky, I would say. And if you're not lucky, then you keep trying hard. But sometimes I would definitely say there are things that happen which I cannot take credit for. Yeah. You know, like finding my co-founder Amit, I was lucky. Right, and some of the other team members, I found Sumit, who used to work in Luxottica. Now, when things need to happen, then you end up finding those people So yeah, there is a certain amount of luck that is associated. I don't think if you're not going to work hard, you will still be lucky. But yeah, if you're working hard, you still need to be lucky.
No, complete. No, thank you. Thank you for sharing that. Tell me, Peyush, today Lenskart is one of the most loved brands in India. You've built a full stack, plus kind of business, all the way from manufacturing to distribution, retail, offline, omni-channel, technology, export, right? And being present in countries. You've done a lot of stuff on tech innovation. I remember the bus, right, that would come home to break that sort of touch and feel barrier. So very, very innovative as a company. But tell me, like, this is today, right? And over your 14-year journey, and as, again, sort of advice to the founders in the room, how do you prioritize and how do you pick those bets, basically, कि, you know, कब क्या करना है, कि अच्छा मैं किस scale पे आके फिर manufacturing, मतलब, you know, क्यों manufacturing करूँ? Should I continue to contract it out? Like, how did you make some of those bets? And it can be gut, etc., whatever. And what can, you know, some of the lessons that people can learn from that for their businesses?
See, I think it's a great question because different people choose it differently. For me, I think, and for us, there are certain truths that do not change. They were same 14 years back, they are same today. And I think many great companies, you'll see they talk about the same things. I think you constantly have to understand that, you know, at the end of the day, people who are buying from you, why they are buying, you need to understand this well. And I don't think you can just go ask Sahil, tum hamare chashme kyun kharidte ho? It's not going to be as easy an answer. Because what he may tell you may not be what you want to know. You want to go deeper. And then people who are not buying, if you ask them, ki, kyun nahi kharid rahe ho aap? So the answers you may get are also not that straightforward. कोई बोलेगा मुझे महंगे लगते हैं, कोई बोलेगा सस्ते लगते हैं, कोई बोलेगा मुझे brand नहीं पसंद है. So it's important to keep asking this question repeatedly every day for maybe next 10 years also for us. Why people who are buying, and why people who are not buying. And I think it's an observational journey more than a questioning journey. Of course, you could do surveys and you could do bunch of things, but observing people and what they are doing and what they are feeling is an important task. And if you can keep doing it, the answers keep coming to you. And so whether we take example of opening a store, which today is called omni-channel, came from that because we were asking people on the website why you are not buying. And people said we want to try. Now in this, the only thing is you may not always be the cool brand and the cool company because everything that your customers may need may not necessarily drive the highest valuation or maybe the buzzword of the town. So you have to choose a path. Are you going to do what everybody else is doing? Or who's your primary consumer? Is it your shareholders? Is it your employees? Is it the media? Or is it your customer? So if you can center everything around your customer and leave everything else, then you have a very clear narrative in the company that this is what we want to do and this is how we'll take our decisions. Even when we were getting into manufacturing, I think there was a lot of discussion, yaar, abhi tum online company ho, omni-channel company ho, where manufacturing is not important. Then somebody will say, India mein if you are manufacturing, then it will always be expensive than China. I mean, we are manufacturing in India. You could take it for the word, but you can try also, and it is cheaper than China. So I overall feel that if you can just stay focused, stay humble, to the ground, focus on your customer, and keep taking decisions, not worry about what is hot, don't worry about keeping the media happy and getting the next news, and not try it. And you know, investors also sometimes like, you know, because they sit on so many boards, they like to give you very great ideas, but may not be valid for one company, may not be valid for you. So I think the truth is you really have to find your own path and journey on a first principle basis, right? The second I would say is the other belief that I've had and I still continue to have is that technology has a role to play in solving this problem of why people are buying and why people who are not buying. जो नहीं खरीद रहे उनका solution बनाने में या जो खरीद रहे हैं उनका solution बनाने में technology plays a significant role if you want to build something which is A, scalable and B, delivers a great experience. Right? ये दो चीजें बहुत जरूरी है. तो या तो अगर आप बिना टेक के वो प्रॉब्लम सॉल्व कर रहे हो तो शायद वो स्केल करना मुश्किल होगा, और अगर स्केल हो भी जाएगा तो मे नॉट नेसेसरली when you are serving 10 customers you are able to deliver good experience. When you serve 1,000 it becomes difficult, when you serve 1,000,000 it becomes difficult. So technology, I think in today's environment even more now with AI, but I always feel is a great sort of, you know, आँख बंद करके, at least for us, कि आँख बंद करके whatever, if I had $1 I would invest there. Now, what to use that dollar for is to solve a problem, is all right. And I think it's true for even D2C companies. It's not, you know, a technology, I don't mean opening a website, you know, that's the easiest technology. It could be answering emails on time, it could be answering customer queries on time, it could be, delivering your orders faster. It doesn't have to be technology that is seen by customers. And the third thing I would say is that customers, like you have to be 10x. There is no limit to how much delight you can give to a customer, right? You can't say, like in our category, we didn't really have benchmarks, right? ऐसा नहीं है कि we could say, this is what other player is doing. So you literally say, how do I get my customer so delighted that they will talk about it to a few more people? And this also you can do it over 14 years and the next 28 years. There is no better way to build a business. There is no better way to feel satisfied about your job, right? And I think there a little bit of emotion also helps. When we sell, जब हमने अभी recently, I'll give you examples of early days also and now. When we started selling rimless glasses, वो rimless glasses में lens chip हो जाता है. But we said, yaar nahi, we have to give something which is unbreakable, even if customers don't pay for it. And then recently, this is maybe 10 years back, and recently when we launched kids as a core category, we decided that on this category we will not make as much money. We want kids to have high quality lenses, but we will not be able to charge more. And even a market like Singapore, we will give 2 glasses for $50. So I think that delight and that emotion and passion goes a long way. It is not always about profits, it's not always about revenue. You need to feel that empathy for the customer. So I would say just these 3 things, you keep doing it, whether it is manufacturing, omnichannel, sab answer usi ke andar hai.
No, it's a great framework or North Star, Peyush, and I'm just recapping, right, just for people. So I think one, having mission, passion, purpose, and something which is not sort of, see, money will not motivate on a day-to-day basis. I don't think any of us go into work thinking that I'm going, well, some might be, and unfortunately, but going to work thinking that you want to do it for making money, right? Most of us hopefully want to live for something bigger than that, whether it's impact or scale or whatever it is, right? And the second one is, I think, just summing up as customer obsession, to say that, look, keep listening to customers. And then one is listening, but two is reacting. And he's saying there, like, focus less on trends and hype and buzzwords, etc., but just be honest to yourself and to your business. Listen to customers, be obsessed with them, and then react basis what they ask for. Literally let them drive your company's roadmap, and they will be happy and they will love you, right? I think that's the kind of learning here. So there is no secret formula. It's just like, it's literally as simple as listening and acting. Tell me, Peyush, you were early in, I remember the VTO, you were building multiple tech. I think ultimately you bought the company and you kind of made it, like you said, invested in technology. Now with AI, so much is happening around us. Tell me what that means for Lenskart in 2 ways. One, what it means inside Lenskart, right, for you and the Lenskart team. And 2, what does it mean for Lenskart's customers?
So I think, look, as the DNA of the company, we think technology first in any solution, problem-solving solution. And AI definitely makes it lot more exciting for us because for us that journey is kind of the base is built. And we kind of feel ki chalo now we have superpower to do things which we could not maybe earlier only imagining. But AI ki journey abhi nahi shuru hui. I think we started the AI journey very early in the company, whether it was deciding where to open stores or it is deciding whether this product is good to ship or the virtual try-on facial recommendation AI use ho raha tha. But abhi ek interesting moment hai. I think I have not seen this in the last 10 years, if you ask me. And it requires, and we are also learning, I think it will require a reset of thought process, and which is why people like me become a little bit problematic because abhi hamare paas 10-15 saal ka jo experience hai wo hamara sabse bada enemy hai, which is why, you know, a 24-year-old is you know, is at an advantage to a 40-year-old. Right? Because you don't have that baggage. You can start thinking mobile phone without having the baggage of desktop. And I think in this AI world, the challenge for us and the learning for us is how quickly we steer the ship as you know, in large companies to a new thinking. And it is very tough because you have teams, you have processes now to rethink everything. वो कहते हैं ना, घर को repair करना is very tough. Refurnishing a house is tough. Building it ground up is always easier. तो हमारे लिए वो challenge है. I think we stand to get disrupted, and disruption will come from the ground up. But what AI is able to do, it blows my mind away when I look at what our teams are doing. But I am thinking क्या कोई बाहर और भी कुछ कर रहा होगा. I mean, I think whether it is suggesting you a right pair of glasses, and you not having to talk to someone, or to figure out what is the right merchandise to go anywhere, to, you know, of course, basic, jo repetitive jobs hain, usme to you can bring quality, but there is a lot more that AI will be able to do. So, I think आप लोगों को, जो लोग अभी start कर रहे हैं, उनको तो problem नहीं होगी, हमको है, right? We have to literally control all delete, करके सब कुछ erase करके, you know, we have to start again, and that's never easy, right? No matter how conscious you are, we have a baggage, which is why we have to promote now new people to lead and to think and sit like a wall in the room, just as an investor and saying, हाँ, make sense करो, right? अगर हम अपना दिमाग लगाएंगे तो भी fail हो जाएंगे. But it is an area to invest. It's a big opportunity. I think growth of the companies will change. I think it will be important in every sphere. It is very exciting. Like I am drinking, breathing AI all day. हम तो पूरी टीम को इतने बड़े रूम में बुला के AI master class करा रहे हैं. We are definitely investing, acquiring a lot of AI companies right now. I've always found acquisition as a good way to speed up on technology, not the first time. I like small, beautiful teams which are building tech, and that has always enhanced the tech capability at Lenskart.
Superb. Thank you so much for sharing that, and takes you know, a lot of self-introspection to know that, you know, especially the whole 40-25 thing. I'm there too, so I relate, and you're right. It is baggage. It is unlearning almost. So I do think that anybody who is in that age group, as a younger person, right, actually has a huge advantage.
And I would encourage everybody to spend a decent amount of time on it. Like just play with it. It is not just for people who are coding.
Correct.
You can write code now with AI. So everybody should spend time on it.
No, absolutely. I think it's essential. It's like a new way of doing everything. It's not just for, you know, like he said, not for coding, or it's for any and everything. Like you can do anything from improving your catalog, into, like, you know, anything that you do in your business. Ultimately, this will be there, right? Anything
going to change. I think in the next 5 years, a lot of businesses will change completely. A lot of new players will be born. God knows what all will happen. So a lot of opportunity for everybody.
Are there exciting AI launches that Lenskart consumers should expect in the coming months and quarters?
Yeah, I think kuch to karna padega, right? I think, there is a lot that we are doing in our glasses. These are phonic that I am wearing, so we are trying to make it conversational AI there. We are trying to launch assistant for you to be able to choose glasses. better facial recommendation, stores में we are making a lot of changes. या मैंने तो थोड़ा सा different ही goal ले लिया है कि everything has to be driven through this. Because I have a phobia कि हम कहीं पीछे, because like I said, we are at a disadvantage.
Same, we have the same FOMO, by the way.
Yeah, so I have
extra काम करना पड़ेगा.
Yeah, so lot that is happening, and I'm hoping more would come. But again, I would caution people here and to us also that don't do it for the sake of doing it.
Yeah.
Right? If you think there is a problem that we have been trying to solve for ages, and we have not been able to solve, and right now our brain tells us ki unsolvable hai, maybe now we go back to the drawing board and say, we tried it 4 times, we failed, but 5th time maybe we will not fail because now we have this new superpower which could have the solution for it. But don't start from the technology, start with the problem and pick up all the 4 or 5 problems that your customers are facing. That same principle, and start from there. Like for example, at Lenskart, maybe you could say, you make me try glasses online, but I don't know whether they will fit me well or the size of it. Now at some point we may say, "Are unsolvable problem hai, itni had tak solve ho sakta hai." But today we could go back and say, "Can I think of solving it in a very, very different way?" Right? So I think that is what is required. We should not get obsessed with AI. At the end of the day, it is a means to an end. It is not the end.
Yeah, it's a tool. It's a way to do things. Right?
It's a way to do things.
It's like internet or like a smartphone.
Yes.
So to say that, I will or won't use it makes no sense, right?
Yes.
I mean, if it is a tool, then you're going to use it.
Yes.
As long as it makes you get better.
Yeah.
You won't use it because it's a tool and available, right? So I think that's great. And you mentioned something earlier about navigating a big ship versus let's say, a speedy motorboat, right? Motorboat, so फटाफट zoom करके, it can turn around, it can pivot, it can do many things. But जैसे multiple decks, multiple people, multiple layers start to happen. How do you then, and by the way, we struggle with this or think about this a lot ourselves as well, right? You have one part of the business, it's like growing more steadily, more maturely, but you still want to continuously keep breaking things, innovating, and keep building the next big thing, right? How do you balance that? At your organization, have you tried different things that worked for this cause at different times that no longer work as you became bigger? Are there any learnings like that?
See, firstly, organizations, whether small, big, large, you have to understand is about people, right? Largely, it's not about buildings, it's not about machinery, it's about people. So no matter how early you are in your journey or how late in your journey, eventually what differentiates a company is how we work together and what type of teams we are building, what kind of people we are onboarding. If a customer is unhappy, it's not about finding the right solution. How many people are feeling the pain of it in the company? How many people will step up and go solve that problem? And so with every, failures continue, at least in my journey, we have had to change course multiple times, if that's the question you were answering, right? And a lot of times I decide something, we decide something, and next day morning I could come up and say, boss, I think I was wrong and we need to do something. So I think today, how to do this in an ongoingly is to build organization and people around you, right? I think most of the companies that I see where they get struggle or saturated, they feel saturated कि मैं अभी और नहीं बढ़ रहा हूँ. It's largely people, because we have to understand that unless I am the stupidest person in this room, at least in our company, the company is not going to grow beyond a point. So we need to surround ourselves with smart people. We need to surround ourselves with people who are willing to take initiative and willing to take risk. And then we are willing to surround ourselves with people who are willing to learn and change. If all of these happen in whatever form of sauce mix that you want to do, then things can propel. And change is kinda in today's environment with AI even faster, without AI also, is your time. I genuinely feel so that the answer to your question lies on an organization's ability to react and the pace at which it reacts and the pace at which it innovates, doing more things, are you able to do more things? ये कोई इसका आंसर बहुत टफ है. Right? I have seen our own organization innovate very fast. I have seen our own organization slow down. And when it slows down, the answer is not कि suddenly अभी 4 लोग और लगा देंगे तो हो जाएगा. The answer is maybe get everybody out in a hall like this and talk to them and understand what is innovating and maybe charge them up again to take risk. But this is the most complex science. It gets more and more complex. It keeps me excited at work. Understanding people, understanding organizations, and it's maybe, I would say, just like the category and the business you are building, my philosophy has been don't look at what others are doing. I don't think you can build organizations by saying, "Acha, is company mein to ye hota hai, this is the right way." And a lot of times when you hire people from outside, they feel that this is the right way. I don't think there is a right way. I think your way is the right way as long as you feel that it is important. You know, companies are very, very fragile. At the end of the day, we are humans, we get emotional. I'm also not saying a company where every employee is happy is the best company. Then, you know, मेरे को तो लगता है 99% of the companies in the world are mediocre. There are only 1% of the companies which break it at every stage, whether you are an early stage, whether you are mid stage, late stage, there's only 1% of the company. So if only 1% of the companies break it, how can you use example of other companies to make your decisions? Because जो भी आप benchmarks लोगे, वो ज़्यादातर तो 99% में से ही आएंगे.
Correct.
So we should not obsess about what other people think and what other people do. The important thing is to do, the important thing is speed. I am obsessive about speed. We need to make mistakes, we need to try fast, we need to make decisions fast, we need to fail fast. And for different companies, I'm not saying the same would be true for Apple, and they have their own philosophy. But for us, and I think in India particularly, you gotta keep the large or the small machine rolling. 100%. You know, everything needs to happen as of next minute.
No, absolutely. I think can't agree more, Peyush. We've been similarly driving the cry for speed at Shiprocket. You know, we've been AI is only pushing that further because it's actually making you 10, 20, 50 times faster at many things, right? Peyush, one last question before we wrap up for the day. What is the one lesson that you think you learned the hard way, and that you think will be beneficial for founders to maybe learn from you, on the show, standing on your shoulders to learn?
Many. I have made so many mistakes that the count is very large. See, I would say two. One is, and maybe I'll give you with example that, sometimes we did things a certain way, and maybe I'll give example. Though, हमारी company में ना पहले everybody was aligned to a net promoter score number. That if this happens, then revenue matters, then EBITDA matters. उसके बिना we would qualify ourselves as a non-performing company. Yeah. Nobody takes bonuses, nothing. And it was a very non-popular belief. And I would say literally 99% of the company used to hate me for this. Because सबका थोड़ा पैसे कम बनते थे because of this, right? Because it is very difficult to achieve a high customer sat score beyond a certain point. And I think we kept on it for 4-5 years, and then at some point I gave in because I gave in to what the 99% belief was, going to from my previous analogy. And then I saw over the next 2-3 years that whole lens card impact of customer delight was dipping, and these are slow changes. And then when I met, sometime later I met a company who I had a great admiration for, and I was just meeting some of them and I asked them, "Yaar, what makes you do so well?" And they told me, in our company, if our customer experience scores are not met, nothing else matters. And I was like, shit, we were there. But just because 99% of the other people did not believe in it, we dropped our own good belief and look where we have got. And we kind of got it back again, up. So I think I would say that sometimes we have to believe in ourselves a little bit more than we do, and we have to not get carried away with popularity and what is common. Uncommon is usually better than common, at least my learning has been, if I have to put it in. You know, if you are doing something different, most likely you are doing it right. You know, because the law of gravity takes things away towards non-right for the long term. So that is one thing that I've learned repeatedly. The other thing I would say is that as you grow, your allocation of time, and you know, I kind of grossly got it wrong after a certain scale. You know, in terms of where I was spending time. I think earlier I used to just be in the stores. Then as company grew, it was a lot about tech, and then God knows what I was doing in the middle. I was just doing reviews. And ye review ke baad ye review, or ye numbers, Excel, and nice presentations. And then at some point, when I went to the ground, I realized that what I see in the room is not what I see on the ground. And it is, and maybe it's not because of anybody's malintent or anything, but so you have to allocate your time as much on the ground as much as you allocate it in the room. So, and I think as entrepreneurs, as leaders, you need to balance that. Sometimes we get carried away with Excels and, you know, the numbers and what. I think numbers usually lie, right? The only truth, and you know, I would also say that आपने कोई customer survey कर लिया, कोई agency बुला ली जो आपको ये सब नहीं चलता. The only truth is the truth on the ground, speaking to your customer yourself and forming your view and then deciding the next course. And the same would be with employees. Just not talk to your top employees, go talk to your store people, go talk to your N-2. I don't think people should get insecure about it, but yeah, you have to get into the ground more often and give it more importance than it usually is given. Is my you know, big failures and now reviving back, I would say.
Wow, very, very helpful, Peyush, and I think a lot of golden lessons there. You know, I want to thank you with all my heart for being a friend to us for so many years and for being one of the most sort of iconic brands. I personally wear a John Jacobs, so you know, it's and it's not because I'm not wearing it today. I wear it. It's a great product, and you've built a great category. Thank you so much.
We are still learning, like I said. The wind is not on our side right now.
It's a matter of time. I know. We'll go back to your framework, obsess on your customer. They'll keep giving you feedback, and you will execute with speed and solve it, right?
Yes.
Thank you so much, Peyush. Really
Thank
appreciate
you.
it. Thank you so much.
Thank you so much. That was certainly, I see that the hall is absolutely full, means the discussion was just amazing. Thank you. Thank you for being with us. Ladies and gentlemen, can I see a little energy in the room? If you enjoyed the session, how much we enjoyed, the energy is going to showcase that. Thank you. Now, taking this wonderful, wonderful evening ahead, can I request CEO Domestic Shipping, Shiprocket, Mr. Atul Mehta, can I request you to please join us on stage? Atul, whenever you join us on stage, something interesting happens. So what is the next segment that we should look forward to? Ladies and gentlemen, immediately after this session, we're going to have the award ceremony. So please be with us. Over to you.
I'll need more mics. Can we have mics on all the chairs? Yeah, so after the last session, we were outside, we were checking what did people like, and I think what clearly stood out, and we saw that happen just now, was personal stories, brand stories of how they are built, and advice from people who have actually done it on what should you as entrepreneurs should focus on. So we are going to put a few founders on the spot, impromptu, and I'm going to call them on stage and ask them to share a few words of wisdom with all of us. So can I have Raghav, founder Fidato, Daman from Astrotalk, Vishal from Echo, Viren from Sudhati, and Rituban from Japan up on stage. Can we have a round of applause, guys? They have been very kind. Hello. Hi. Come. Sorry for putting you on the spot. But, one thing which everyone loves is, like I said, hearing from people who have actually done it. Come in. Right? And what we have in the room is a lot of people, budding entrepreneurs, planning to start their own business. So, yeah, a word of advice for them from your journey. We'll start with you, Rituban.
I mean, I don't know how many of you guys know my journey, but
OG, you're the OG.
I mean, a lot of people in the room follow Flying Start only. So I started with YouTube, and my whole mission was to just teach whatever I've learned in the 17 years of my entrepreneurial journey. And that ended up creating the largest e-commerce education community on YouTube. Yeah, so the journey has been nothing sort of fantastic, and my dream was to build a brand. Even though I was running a brand in the US of a hair coloring product, I knew in order to have control and in order to build a truly something that lasts. So I wanted to do something in India, and that's what created Japam. Now, in terms of like what the new entrepreneurs should be looking for, having taught so many people, I know the number one thing that comes to mind is trusting a system is very important. So all of us are exposed to, say we want to build a brand, we're exposed to Shark Tank, or we're exposed to some YouTube content, and we want to start up something in D2C. And we learn some system, right? But having that keeda inside, right? Ki kuch karna hai. So that leads us astray many times. So when you find a system that works, just stick to the plan, and then also be ready to pivot in the direction that you have chosen, because it's not just about creating something, but creating something meaningful. After trusting the system, then I think the most important thing is to learn to pivot, because there will be many times in your journey where you will be like, ye kaam nahi kar raha yaar, ye maine socha tha karega, kaam nahi kar raha. So be ready to pivot in different situations and always learn. I follow something called the 20-hour rule. You can do your research, it's a TED talk.
What?
The 20-hour rule. So it's like, even if you don't know something, you don't need to be the best at the world at it. Say you don't know meta ads, right? So you dedicate 20 hours of your life, or 20 hours zyada nahi hota. So if you just open up YouTube, watch a few videos, start practicing, learn some more, start practicing some more, 20 hours is less than a week of hard work. And then you'll be better than 80-90% of the world at that game. So that's
good. I think pivot, because early on in the journey, what you thought as what the business is going to be potentially might not be what it is going to be eventually. So the ability to be flexible and to pivot, and I love the 20-hour rule. It's actually very empowering, because when you read about something and it's new, it becomes overwhelming. 20 hours seems like a controllable time. I can devote 20 hours to a thing, and that you're right. You spend 20 hours, you unlock value. Daman, moving on to you. The journey of Astrotalk and your advice for people, and it's a very different business, a different category. A lot of people here might be thinking of very niche businesses. So any piece of advice you want to give them on how to think about their entrepreneurship journey?
Okay, so I've been fortunate to be a part of many categories in the past, right? I've sold stuff from a Channi to a Rudraksh to ACs and robotic vacuums. And one takeaway that I've had all these years is effective branding reduces the cost of acquisition. Effective operations reduces the cost of doing business. So, you know, these two things, if you start working towards them, you know, as a team, it eventually works out. And as Peyush said before that, you know, keeping the customer at the center of everything that you do, day in and day out, that's one thing. And e-commerce is a pretty brutal business.
Talk about it.
You'll get the first 10 customers very easily because your friends, your mother, father, they'll all buy a product and they say, beta, bahut acha hai. Okay. You'll get the next 1,000 customers a little bit more difficult, right? Because you'll have to go into your colony and, you know, throw some local ads. But when you start hitting lakhs of customers, your cost of acquisition, your systems, processes, they all need to change. What got you there will not get you forward. So you need to constantly, one, reinvent, and second, build systems for scale. And remember, one thing while doing e-commerce is you are under no obligation to be who you were 5 months ago as a person. You have to keep building newer and newer systems, better infrastructure, so that you can build for scale, because thankfully we are in a market where scale is insane, right? You can only stop with where your imagination takes you.
Thanks. I think a reaffirmation of the point. You need to reinvent. You might be a different business 5 months down the line. Moving on to you, Raghav, from a banker to a massively scaled business, right? Like, share about your journey. How are we here? And a piece of advice for everyone. For context, Raghav runs Fadito, that's how you pronounce it, where just like we had Deodap earlier on stage, you get a lot of value products at the best price, a lot of variety. So Raghav, share about your learnings for budding entrepreneurs here.
Thank you so much for having me here. I'm so grateful that, you know, I've been hearing about Japam, I've been hearing about AstroTalk, and so glad that I've been, you know, I'm sharing stage with them. Thank you so much. As you know, Atul mentioned, I'm an ex-Citi banker, you know, accidentally got into business. The business journey has been tough, you know, it's been like 12 years we started. We were on the supplier side, you know, my first assignment was with YEBHI. We went to Peyush's office, you know, I was just telling Sumit that, you know, I had my first meeting with him 12 years back when he was just into spec selling, and today obviously he's where he is. And so we were doing this and we built a good 100 crore company there. Last year, Jimmy and I, you know, my business head, we were sitting and we said we supply to lots of these channels, and why not to start something on the social media? And it just happened on a table, a conversation, and he said, okay, let's start it. And he himself started doing something on Meta, and next day we get around 100 orders. I said, wow, you know, this can happen. This was, I think, in December 2023, exactly around 18 months back. Today, you know, I'm so happy to share, we do around 25,000 orders a day. It just happened. I don't know how it happened, but yeah, it did. I think we are in a market which is very, very price sensitive. They want a great quality at affordable pricing. That's what we were tapping. In fact, I was hearing one of the panelists from Deodap. He mentioned that, you know, we are targeting Bharat, which I think possibly he mentioned a tier 3, tier 4 cities, where, you know, the aspiration still is very high, but the affordability is at a price point which obviously they can afford. That's pretty much we are doing. The challenges are same. You know, we were a small business supplying to, you know, Flipkart and Meesho's of the world. When we started doing from 100 orders to 25,000 orders a day, the scale is genuinely a problem. You know, you've got to have right technology, right people, right setup. So all of this just comes with lots of, as I said, challenges. And we're just getting there. Idea is to build a brand to get to a tier 3, tier 4 city where our products can be affordable. It could be a value for money for them. And I think that's where we strive for.
Awesome. I don't know if you heard it right. He said, not a large business, 25,000 orders a day. That's what you call modesty. But awesome, Raghav, and great, like building for tier 3, tier 4 in a sustainable manner, having them access e-commerce, tells you that it's not just one size fit all. When you see what's happening in the world of e-commerce, there's like a lot you can do. Forget about e-commerce, even otherwise on the enabler space, etc. The market in India is growing, and you can build, if you have the right thought, conviction, and great execution. Moving on to you, Vishal. Echo, you are competing in a very, how do I call it, challenging category. So share some insights for people who are trying to build in categories which are very intense. How do you continue to innovate, and like one piece of advice for folks here?
So, first of all, my brand name is Echo. It's ACWO. Generally, people get confused with the other insurance brand, but we are acwo.com. It's echo.com, where W is silent. So, when I say when we start a business, the most important role played was the product. But that was something for me as it came on a plate for me, because my two elder brothers, Jinesh Bhaiya, Etal Bhaiya, they did half work for me, because we are already a parent company into the same category of earbuds. We are into audio category, where we see that he has done my half work, where we have already innovated the earbuds which are not there in the market. We have come with the range which is India's first range of earbuds. You go to my website and you will find that the design, the communication, the features are totally different. So the other part of the work was properly marketing it, properly communicating the features to the consumers, properly marketing it in the platform where my audience can understand the product range. So we decided the right platform, right way of communicating to the consumers. We were very much sure that we will not go to marketplace, because marketplace is already cluttered with the other brands. So we thought of doing whole business from our own website. We started with 5 orders a day, and now we are doing somewhere on 1,000 orders plus a day. With the help of Shiprocket team, with the help of other enablers, with the help of other tools, whatever is there on the D2C front, we have implemented every stuff. We were very much sure that before scaling, the readiness should be there in optimizing the scale and organizing the setup. From the product side, from the factory side, from the service side, from the consumer understanding side, we were pretty ready with the whole hard work of 15 years of my parent company. But from the Echo side, we were very much sure that we have to always keep on working on the designs, keep on working on the product features, and using the AI, because most of our earbuds are already AI enabled. Our ENC noise cancellations come with AI ENC features. So using all those things from long back, it's time in India now to implement such stuff, but we are doing this from long back, and I think this is helping us. The service and the support is helping us. The customers, repeat customers are helping us in growing this business. And all thanks to Shiprocket, all the tools which I am using from Shiprocket, where I am getting a good help and support to them. My advice to everyone is that please implement. Generally people talk much, strategize much. I think implementation is the key to sustain in this market. Thank you.
No, thanks Vishal. And one, rightly said, execute. Thinking has a role to play, but great execution has a bigger role to play. But I like this point on, when you're doing it, do it with proper planning. Don't do half-heartedly, be planned. And that's not contrary to what we were saying earlier, right? You can pivot. You do one thing with full conviction, do it for 3 months, not working, pivot, change, evolve. But yeah, like amazing insights. Viren, what a story. अगर scale देखा है किसी ने तो Sudhat, like Viren is the founder at Sudhati, you would have heard about them, seen them on Shark Tank. Like एक तो ये scale एकदम इस scale पे like had you envisaged कि ऐसा होगा, कैसे हुआ? दूसरा, how did you decide getting into this category? It is a competitive category. Just share your words of wisdom.
Hello all. So I'm the founder of Sudhati. Myself Viren. Hello all. I'm the founder of Sudhati. We are Indian ethnic women's wear brand, and honestly past 2 years has been like a roller coaster ride for us. The idea was very simple, just connecting out. So we are from a textile hub, Surat, and it's the hub of manufacturing where everyone is just creating new fashion products. But freshly graduating, the idea was simple, that not a single brand from Surat has been at Indian or global stage, despite it being a manufacturing hub. So me and my co-founders quickly picked up. D2C was growing. It's like 20 months back we started Sudhiti, and currently, like last week, we crossed 10 lakh plus app downloads in just 20 months. Wow. And within this period, Shark Tank came in. The idea, when we pitched it to the Shark, like Peyush sir is an investor. 3 Sharks came on board. We got a lot of insights. We stayed to our path. And today is just simple insight that listen to the customers since day one. Like our motto at the company is call customers. Just understand what they're looking for in women's fashion and what are they willing to spend. So we are serving out tier 2, tier 3 markets with extreme affordable prices. It's unbelievable price at what we are serving at a market where people were selling out for, suppose we are doing saris. So when the saris were available for 5,000, 6,000 online, we came in and said that, okay, you like the design, here's the better, affordable quality version of what you're paying 5,000 at just under 1,000. So the idea quickly picked up in tier 2 onwards, and since then it's just customers joining on this ride of the Sudhiti and like,
but how do you build trust? Chalo, I'm saying the rest of the offerings were थोड़ी सी different. Yours, like buying साड़ी, वो तो मतलब everyone will say, मेरे को पता है कहाँ से खरीदना है. Like it's so personal to Indians. Like how do you build trust?
So initially it was easier for us because the first shock factor for everyone was like how, like the prices were not justified. Like it's not possible selling at what prices you are doing it. But just being from that business family, we knew the idea, we knew the product will talk itself and it will be a word of mouth. Once they received the product and they were surprised like, okay, it's not just an online thing, I can receive these saris. So customers started talking themselves. They started recommending that there is a brand who's doing this, they are unbelievable, you should try it. And so just the insight, because it's very fair and it's very new. Last week we crossed 10 lakh downloads. Till today, we never ever spent a single rupee on promoting our app. And it still crossed 10 lakh plus downloads.
Amazing. You know, when you get into in a category which is dominated with beliefs, like something like sarees, right? Like you're not like everyone knows where to buy it from.
And with with men selling sari.
Yes.
as coined on Shark Tank, like 3 men, we are 3 co-founders selling sari.
But amazing, and that tells you the power of conviction, differentiation, that no category, no business, like it's not that you can't succeed in that. You require conviction, you require focus, you should be able to reinvent yourself, focus on the customer, execute well, and keep the customer at the heart of it. A big thanks to the panel here for agreeing to impromptu come here and share their insights. Can we have a round of applause for them, guys? Please. Thank you. Thanks a lot for being here. Can we have a quote?
Mic testing check me too. Check mic testing check me too. Thank you. Thank you to all the bright smiles up here on stage. Okay, ladies and gentlemen, I know we have less people in the room, but less doesn't mean that we're going to pour in less energy in the room. The energy should be a lot. Make sure anyone and everyone who's coming up here on stage, we bring in a lot of chairs around. Thank you guys, you've been a wonderful support so far. All right, ladies and gentlemen, once again, welcoming you all. Now, this is a night of celebration. This is a night wherein you recognize your spirit, your ambition, your passion, and your dedication. This is the Shiprocket SHIVIR Awards 2025. On 8th of July, we had the incredible opportunity to host the SHIVIR Moonshots, an exclusive platform designed to give high potential startups a chance to pitch for funding and receive direct mentorship from the top venture capitalists. It was, of course, a power-packed day full of bold ideas, real conversations, and meaningful connections. Our panel of investors included Vishal Golcha, venture capitalist, Dhruv Dhanraj Bahan, Eternal Capital, Sunil Sachar, Huddle Ventures, Jivraj Singh Sachar, Indian Silicon Valley Capital, Varun Verma, Fireside Ventures. Here's a quick glimpse of energy, excitement, and impact from that day. Can we please have the video? As a part of the Moonshot program, we also took a moment to recognize the most promising ventures of the day. To felicitate the winners, can I please request Mr. Vishesh Khurana to join us on stage? Alright, so I think Vishesh is not here with us. Can I request Mr. Podal to join us on stage? Mr. Praful Podal, can I request you to join us on stage? You know, there's a reason why I'm calling you on stage. The kind of energy you got on stage with that torch thing, that was amazing. Yes, we're just going to request you to take the center stage. Please put your hands together as I welcome the team. Socks carving, winning, Yash and Yaksit. Can I request all three of you to please join us here on stage? Our panel was truly impressed with their unique product line, infectious energy, and most importantly, their clear roadmap for scale. आप सभी की जोरदार तालियां. Come on, ladies and gentlemen. So that's essentially our first recognition for the evening. Shivir Moonshots. Congratulations. Thank you. Yes. Just be with us. Be with us right in front of the stage. I might bother you soon. All right, ladies and gentlemen. Once again, my name is Vanvi Khilani, and it is my absolute honor to welcome each one of you joining us from India, joining us from the capital city, joining us from Mumbai. Thank you for being here with us, people who have traveled long distances to be a part of the much-awaited celebration, the Shivir Awards Night 2025. We're going to take a moment here, and of course we're going to come on to this, but before that, tonight, ladies and gentlemen, is more than a celebration. It's a tribute to India's boldest entrepreneurs, emerging brands and visionaries, the creators who are shaping the future of commerce in India. Whether it's through innovation, through storytelling, through scalability, each nominee has carved their own niche and their space. चाहे इनोवेशन हो या स्केल हो, अपनी कहानी इन्होंने हर नॉमिनी ने एक अपनी जगह बनाई है, एक अपनी स्पेस बनाई है. And you won't believe we had more than 500 nominations across different categories. जिससे साफ साफ दिखता है कि हमारे जो नॉमिनीज थे, हमारे जो पार्टिसिपेंट्स थे, कितने मोटिवेटेड थे, कितने पैशनेट थे, कितने एम्बिशियस थे अपने गोल्स को लेकर, अपने विजन को लेकर. Now helping us to shortlist the very incredible, we have our jury members who brought together their expertise, insight and fairness to the judging process. Please take a moment to put your hands together as we thank them. Apurva Chamaria, Head of Startups and Venture Capital, Google India. Ishan Khosla, Founding Partner, Huggy Ventures. Malika Sadani, Founder, Moms and Company. Sarita Raichura, Director, Blue Ventures. Divyanshi Chaudhary, Pre-Seed Investor, DEVC. Thank you so much. I'm sure it must have been such a difficult process for all of you to kind of decide who should be actually in the winning list and who should not be. We're going to begin with our first category here this evening. The top 11 jury awards. For each category, I'm going to take a moment to explain what it stands for, and then going to invite the presenters on stage to announce the winners. First 4 categories, can I request you all to please give it up as I invite up here on stage to present the awards. Mr. Gautam Kapoor, COO, Shiprocket, can I request you to please join us on stage? Is he here with us right now? Fantastic. We're talking about stars, and the star is walking up here on stage. Come on, everybody. I am also going to request Mr. Navneet Gupta, Zonal Head Retail from ICICI, joining in. We have Mr. Sachin Bhagat, Zonal Head Private Banking. Give it up for the incredible gentleman as well. Thank you, gentlemen, for being our presenters for this category. Now, kick-starting the award category, we have the AI Trailblazer of the Year. This award primarily recognizes those who have significantly advanced digital commerce using artificial intelligence through automation, personalization, or scalable innovation. सेफ टू से ये अवार्ड्स उन ब्रांड्स के लिए है जो एआई का इस्तेमाल करके डिजिटल कॉमर्स को नेक्स्ट लेवल पर लेकर गए हैं. इनोवेशन की बात हो, ऑटोमेशन की बात हो या इंटेलिजेंस की बात हो. Up here on stage, you already see the nominations. We have Forge.ai, we have Seller App, and we have Distacart. Do I request our presenters to announce the awards? All right, ladies and gentlemen, please give it up for AI Trailblazer of the Year.
Forge.ai, congratulations.
Can I request you all to please bring in some energy in the room as we congratulate our winner, AI Trailblazer of the Year. Congratulations. I wanted to stay on stage for the next category as well, and I think I'll take that moment to announce the winners. I will request you to enjoy and just present the awards. Next up, ladies and gentlemen, we have Ambassador of Cultural Heritage. As the name suggests, ये awards उन brands के लिए हैं जो कि culture, India के culture को मॉडर्न कॉमर्स के थ्रू दुनिया तक पहुंचा रहे हैं, be it crafts, be it wellness या traditions. This award primarily celebrates the brands preserving and modernizing India's rich cultural legacy through innovative commerce. Can we have a look at the nominees, please? We have Namak Valley, we have Shail, and we have Kashmir Works. Time for us to look at the winners of Ambassador of Cultural Heritage. Please put your hands together for Kashmir Works, Namak Valley. So we have a tie in this. Please give it up for both of them. Once again, we'd like to congratulate. We don't have one winner, but we have two winners in this category, Kashmir Bags and Namakwali. Congratulations for being the winners of Ambassador of Cultural Heritage.
सभी को मेरे समय में शिवना को मतलब होता है नमस्ते। आप सबको मेरा नमस्ते। आज बहुत अच्छा और शुभ दिन है